Good morning, everybody. How are you today? We're here live with Stock Markets with Bruce for Thursday, July the 21st, 2022. And we're in another new location, top secret, away from prying eyes. Uh, we're in a hotel in Calgary. Okay. We're fine. We're great. All is well. It's going to be a warm day for us, not like some of you folks out there who are really suffering. We're going to be in the mid 80s here in Calgary. That's called hot here. We have air conditioning, and it's good. We had to turn the heat up, like we had to turn the dial a little warm. It was too cold in the room. Wonderful. So no complaints. We're doing well. Little behind schedule at the moment, but we're up and running. Just noticed an announcement that came out in the last 10 minutes. The European Central Bank, the ECB, the Fed of Europe, just raised their Fed funds rate or their European rate by half a point to half a point. From 0 to 1/2 of a percentage point is the ECB's official interest rate to its banking community. And the worry in Europe is, will this cause a recession? Let me tell you, if your economies are so vulnerable that a 1/2 of 1% interest rate could put your economy into a recession, you are screwed already. You're done for. We've got 9% inflation in Europe. Half a percentage point on money is still free money by 8.5%. Ridiculous. You're better off buying a commodity in Europe and have it go up in value and sell it later for the gain than buying a banknote or buying a bond, because you're not going to make any money buying a bond. You're going to lose money. Now, Germany used to charge you money if you lent them money. That's how good it was the last 8 of the last 10 years, 9 of the last 10 years. It was a point in time that mutual funds, pension funds, hedge funds, all these outfits would park money into the German 10-year bond for a safe place to hang out, because they couldn't find a place to invest the money. Money was so plentiful. There was so much money available to borrow for free that these outfits borrowed all they needed and they didn't need anymore. So now they had all this money coming in from contributions from employees through pensions and what have you. They would buy the 10-year German note, the 10-year bond, while the American 10-year bond was paying out 1% or whatever it was. The German 10-year bond was negative 0.5%. So you were guaranteeing yourself to lose 0.5% on your money every year for 10 years by giving it to the government of Germany. Of course, the other side of it was you were buying the bond using euros, and euros were rising against the US dollar more than the 0.5% you were losing on the interest rate. So the gamble was, we'll keep our money in euros, and as euros rise in value, we will be able to buy assets for even lower prices in the future, internationally and so on. Just a ridiculous system. Anyway, it went nuts, and that all ended when inflation began to pop up. And inflation pops up when suppliers, corporations, anyone, you and I, we feel we're worth more money than what we're getting. We raise our prices. And if the person on the other end of the transaction agrees to pay it, we are happy. They're miserable, we're happy. But then they raise their prices because their costs just went up, and they pass it on, and then that gets passed on. And then you and I go to a grocery store and go, oh, geez, I just got a 5% raise, and my bananas are 20% more expensive, and my milk is 15% more expensive, and my beer is 20% more expensive. What the hell is this? Yeah, that's when you realize, oh, this inflation thing also affects me. Even though I can get a raise, I lose when everything I need is higher. Like my mortgage rate used to be 2% or 3%. It's now 5%. Or my car loan used to be zero financing from the BMW dealer, zero financing for 7 years. Now they want 4.4%. Or I go to my banker and I used to get a line of credit with 1.5%, 2% interest rate on 50 grand. Go ahead and spend anytime you want. Now that loan is going to 3, 4, 5%. Whoops. I didn't know that was going to happen. Oh, yeah, that's what happens with inflation. And it just keeps going and going and going until people decide I got to not raise prices to keep my business going, or I've got to reduce my prices, or I have to reduce my costs to keep my margins intact to survive economically, because that's how quickly it changes from I want to make more money to I need to survive and not close my doors. Tesla is a classic example. Last night they came up with their numbers. Now Tesla's had everything you could possibly have go wrong against a company has happened to Tesla in the last 3-6 months. It's happened to GM and Ford as well. It's happened to Microsoft. It's happening to Apple. It's happening to all companies out there. But Tesla had to announce yesterday their results, how they did in the last quarter. And what they announced and what they revealed was exactly what everyone else in a way is dealing with. Not exactly every other company runs like Tesla, obviously, but Tesla is a unique case. They have factories in the US. They have factories, factory now in Europe. They have a factory in China. They sell product internationally. They have great demand for their product. Matter of fact, they have more orders in that they can deliver. They've got a backlog of car orders, SUVs and everything else. Nice problem to have. But the problem they got caught with was because of COVID, they had their factory in Shanghai shut down. They also had delivery problems. They had part supply issues. They couldn't bring in certain components quick enough to match the demand at their factories in Fremont, California, in Shanghai, and now Berlin, and now Texas, and so on. And so they did at least 4 price increases last year. 4. Now, one of the price increases they did was a sneaky one. The United States was talking about increasing the tax credit if you go to an EV kind of vehicle. And as soon as that came through, and it was a couple of $1,000 a car, Tesla immediately raised the price by $2,000. And so you paid $2,000 more to get $2,000 from your government, and the $2,000 more you paid went to Tesla. So actually, the EV credit was a price increase to Tesla. That's all it was. It was a sneaky little move, very effective. Who's going to stop them? The other price increases were because of costs. Tesla desperately trying to bring in everything they need. They're paying more to get the parts they need. They're paying premium money to get first in line with their suppliers to get their product. So suppliers to Tesla target Tesla orders first before they do anything else for anyone else, because Tesla is willing to pay more for the services, which of course means car prices go up for you. The problem that Tesla's running into, unfortunately, is even though they've raised prices 3-4 times last year, they ran into higher costs, their margins are slipping. So when they do sell a vehicle, they don't make as much percentage in profit per vehicle that they're selling. They're making less profit per vehicle. All their other costs have gone up too. Their employee costs, their electricity costs. Can you imagine the electricity costs that Tesla has? They make electricity by having solar panels on their roof. Oh, sure, yeah. But they also have electricity bills. They also have other bills like you and I have to be in business, and those numbers are dramatically rising globally. And so Tesla is making less money from more vehicle sales, and the projections going forward now are that they will sell more vehicles next quarter and the quarter after, as long as supply chain issues have been calmed down. They might raise prices, but they might not, because they don't want to overprice their vehicles. They're pretty expensive now, and it's likely their margins will continue to be compressed. And that's the bad news, because at the end of the day, a company's shares trade on the kind of money the company's expected to make in the future, not what you made last year. We're not trading your stock on what you made, how much money you made 5 years ago or last month. We're trading your stock on what you're going to make next month, next year, 2 years from now. We want to see the projections. We want to see forward momentum, higher earnings coming across your balance sheet, and that will justify your stock price today and your stock price going forward. As option writers, you guys are in the perfect position to cash in, because corporate America, corporate Canada, corporate North America, corporate Europe, corporate Asia, corporate South America, Africa, everywhere is going to make less money next year and the year after that on a per unit basis. Margins are going to shrink everywhere. That's what happens with higher inflation, higher business costs like in interest rate prices. There's going to be higher taxes. There's going to be higher utility fees. There's going to be higher everything fees. Margins are under pressure, and it's going to continue. And it's going to happen to Apple. It's going to happen to Microsoft. It's going to happen to Oracle, Google, Amazon, Cisco. I don't care. You name any company you want. I'll name them all. They're all under pressure right now on their margins. One way to cut margins is you cut staff, dump people, drop them off, don't hire new people, let the attrition take over. So if you have an employment force of 10,000 people globally in your company, every year, usually 500 people leave every year. They age out, for one. I mean, every year, everyone's a year older. Sooner or later, people leave for many, many reasons, one of which is they retire. Some of them are, Joe Schmuck went for a skiing holiday and crashed into a tree and died. Well, not coming back to work. We're not replacing Joe. We're not going to replace Joe. We're not going to replace people that leave the company, whatever the circumstances. We're just going to work within and go with a lower labor force and keep the company running with who we have left. And if in 2 years we're down to 9,000 employees, well, then that's a 10% drop in employment, which means we can pay our employees a bit more, but still pay less overall in salaries and benefits because there are fewer people here. And if we can maintain our production numbers, because there's a recession and things are under pressure, we actually make just as much money as we made 2 years ago. Lower costs to make this much gross revenue. If that works, great. But if it doesn't, if attrition alone isn't good enough, you start doing the layoffs. And now you have to decide who to let go or who to buy out. And you start cutting departments. And here we go with what we heard from Apple the other day. We're hearing cost reductions. You're going to hear that term a lot, cost reductions. It's a nice way of saying we're letting people go and we're closing departments down. Or we're going to take our buildings. We own all these buildings that our offices are in and our factories are in. We're going to sell them. And we're going to turn around and lease them. That's called sell leaseback arrangements. We're going to get off the hook for these mortgage payments that we're under. We're going to get off the hook for the taxes we have to pay on this property, the upkeep on this property. We're going to dump these buildings off completely. We might get some equity out of it, great, but we will definitely be on our balance sheet. We'll be way less in debt. And then we'll turn around and we'll sign a 10-year lease and a 5-year lease and a 15-year lease on various of these properties, knowing that in 5, 10, and 15 years, we have the option as a corporation to walk away from any of these buildings and either build new buildings entirely on our own or lease other buildings elsewhere if there is a recession, takes a toll on real estate values. So if these industrial properties that we've committed to lease for 5, 10, 15 years don't appreciate all that much or do level off, just stay at this level, and there's new buildings being built 2 miles away that could work as our new factories or our new head office, we might negotiate with that builder over there to say, hey, our lease is coming up in 2 years on all these buildings over here. For something new, and can negotiate a custom 10-year lease on a brand new facility that they're building at their expense, customized for our corporate needs. This, as a corporation, is a way to reduce liabilities, obligations, and try to stay ahead on cost cutting. That's how you do this game. Same thing with all the equipment in the buildings. All the machinery in the buildings, they sell it and then they rent it or lease it. The vehicles, they don't buy vehicles, they lease vehicles. They don't buy gigantic press machines, and all. They lease them. And this is how corporations reduce their costs and reduce their operating margins as much as they possibly can. And when they don't need those units anymore, they walk away from them. And the owners, they've got the problems, because if you have a unique machine that only one company in the world can use, and that company doesn't want it anymore, you've got a machine that nobody wants. And so now you're scrapping this thing. Away you go. Cost of being in business sometimes. In any event, Tesla has announced and has told us what's going on. They sold off 3/4 of their Bitcoin in the last number of months. Smart move, don't you think? They sold it for more than $20,000 a coin. I bet you they did that way back when it was 40, 50,000. And so they unloaded that pretty quick, because they were like, oh, we're getting into it. This is great. That experiment didn't work. Interesting how the stock of Tesla was the darling of the market, and was the was the rule breaker of rule breakers. Whatever Elon came up with was just a magical way to get the company to be more valuable, and it'll make money for all kinds of people, and blah blah blah. And it's now $763, up $20 in the pre-market this morning. And the reality is the Bitcoin thing didn't work. They've got margin problems right now globally. Even though with 4 price increases, they still can't keep their margins. There's problems underneath the surface here. Well, that's called real life, and that is real business. And eventually the market will make them pay. They will make them pay on what's going to happen. We'll just see how this goes. Tesla doesn't get the rebate on cars. That's correct. I don't want to indicate to anybody that Tesla does get the rebate on cars. The rebate goes to the owner of the cars. But what Tesla did was they price increased their vehicles as soon as the rebate was re-extended and redone. They priced their retail price so higher so that the individual that got the rebate is ending up paying the same amount of money as they were before. But Tesla, in effect, did the bump in price to charge the customer more, and now the customer has to go get that money back from the government. It's a great way to make money. It's America at its finest. It's socialized business in America at its finest, and yet all Republicans are convinced, oh, we don't have socialism here. Yeah, right. Yeah, tell that to the airlines. They are so socialized in America. It's unbelievable how many billions of dollars the American airlines have been handed by governments for nothing, and how many billions of dollars of debt right now the American taxpayer has guaranteed the airline industry in the United States. It's untold billions. And I can tell you that the free enterprise thinking people at the airlines, well, we're making it our way. We charge and we pay our bills and we make money. Yeah, but you also get government handouts left, right, and center. But let's talk about that, because we don't want to go there. Anyway, roads are socialist. That's right. The roads are paid by everybody and used by almost everybody for everything. Oh, and by the way, talk about roads and talk about socialism and talk about happy times. Look at this. Here, I'm holding something here I haven't held in my hand for quite some time. Jen is laughing in the background. Look at that. Look at this precious. Caffeine-free Diet Coke in Canada. It's Diet Coke, Coke Diet, English and French, in a can. Now this is gold, Jerry. It's gold. If you want to buy a caffeine-free can of Diet Coke in Switzerland, number one comment, good luck. You're not going to find caffeine-free Diet Coke in Switzerland. You'll find Coke Zero, because Coca-Cola is trying to move their brands around. You might find caffeine-free Coke Zero, but that takes a real bit of searching to do. But if you could find a can of Coke, even at the grocery store, these are about in Zermatt or in Zurich, these are 1 franc to 1.10, 1 franc 10 cents. which makes that about $1.20 American. Kind of, if it's 110, it's about 120 US roughly. If it's 120 US, it's 150 Canadian. So it costs me $1.50 Canadian to buy a can of Diet Coke or Coke Zero in Europe. Switzerland, Germany cheaper, but definitely Switzerland expensive. This can cost me 50 cents Canadian, 1/3 the price that I pay in Europe for a can of, in this case, what I really want, caffeine-free Diet Coke. Absolutely incredible. When I got back to Canada with Jen and I went grocery shopping, I went to a Walmart, super Walmart, for like 2 hours after we landed. I mean, a super Walmart. I had to get some cream for the coffee. We had to buy some yogurt. Just some stuff. I'm looking at the prices going, yep, they're higher than what I remember, but they're nothing like what they are in Europe. I mean, this is cheap. Canada is one of the cheapest countries in the world to live. I can honestly say that. The problem is that Canadians are also one of the poorest paid people in the Western world. That's the reality of it. So a Canadian worker might make $15 an hour on a I'm talking about not the high-end Canadian top money maker. I'm talking about the masses. You're making $15 an hour in Canada. A 50-cent can of cola is expensive as one franc in Switzerland for a Swiss national. It's all relative. So in Switzerland, you'll get paid in francs, and you'll make more money gross, but you'll pay more in taxes, and you'll pay more in prices. It's all relatively the same. In other words, you're poor in Canada if you are a minimum wager. You're kind of poor in Switzerland if you're a minimum wager. You're not driving a Benz. You're not driving a Beamer. You don't have a car. You're public transit. You can't even think about a car. You're buying a house, forget about it. You're never buying it. You're a renter. In Canada, you're not going to buy a house either. If you're a minimum wage, you're a minimum wager in Arkansas. You're a minimum wager in Florida. You're a minimum wage worker in California, New York. You're not buying a house. You're not getting a car. What are we talking? What are we nuts? The car you're getting is 15 years old, and it's $1,000, and it doesn't run very well. And there you go. That's what you're going to get, of course. But I found it pleasurable to go to the grocery store. Jen and I went to the Costco yesterday. It was a delight. Looking at those prices going, oh, God, is this cheap? Good Lord, is this ever cheap? What we've been paying the last 10 weeks versus this is incredible. We knew going in, though. We knew going to Europe it was going to be expensive. It's not like I'm naive and I don't know. It's just really interesting to see it in real life. And it is a most interesting world in which we live. But for those of the world out there who don't travel, I'm not talking about you guys, but you know and I know that there are complainers all the time. And we hear nothing but complaints in our home countries about how it is. And the old saying is, you think it's bad where you are? Why don't you get off your fat butt, especially these North American butts, which are fat. And why don't you travel overseas and check it out somewhere else? And when you come back, then tell us what you think. Because when you see it elsewhere, you'll go, oh, the priorities are completely different over there. It's way different than here. And then you decide for yourself. But anyway, just happy to say I have what I really want to have in my hand here, a caffeine-free Diet Coke for 50 cents Canadian, which I will say is too expensive because in the past, I was able to buy these for 30 cents Canadian, but the prices have gone up and the cans that I bought were not on sale. When I find them on sale, I'll buy even more and I'll save even more. Anyway, thank you, everybody, for being here. Good morning to all of you. And thank you, everyone who is doing exactly what Spicy Android started doing first thing right off the get-go. Spicy Android finds that I'm posting my show and I'm going to go live. What does Spicy Android do? Hits the thumbs up button and announces it. I am thumbs up number 1. Richard Carlin 3. My Life number 4. Mark Cherry thought he was number 4 too. Doubting Philosopher, I'm number 5. Look at this. Lame Duck, I'm thumbs up number 9. Odin's Pumpkin is here. Tiff is here. Wing Commander H. Gregory, number 17 already. Look at the thumbs ups coming in here. Zane of Austin, the other day I was at 107. Welcome to the early part of the show. Well, Sell My House Fast, number Marva, number 27. Let's go for $8 on SoFi. Wouldn't that be terrific to go to $8 today? DQ 36, beautiful. Good morning, Uncle Bruce. Kristen, should I buy GameStop after the split? Do options? What price? Do not buy GameStop after the split. Oh no, don't do that. No. You want to be writing options. You just want to be writing. We're going lower, I think, after the split. I don't know why we're going higher. John, how you doing there? Steve, SoFi up 20% in the last month. John's touchpad, I got in there at number 11. Anyone interested in Intel? Asks Steven Hawkeye. Number 44. Here we go. JL, I'm 41. Options Nomad, I'm 49. Who cares? I'm up. I'm thumbs up 53. Look at that. Thank you, everybody, for popping in here. Alberto, 55. Let's go. Andrea, number 57, baby. Gotta love it. Gotta love it. I like the rants. Take them from what you want, but there's something always to absorb. Thanks, Bruce. Thanks, Brian. Alex, the problem with staff attrition is your better staff will work, will walk if they are suddenly being asked to do more for no additional benefit, or will vacancies dry up. That's true. Corporations that think that employees are an expense and not an asset to the firm. It's when companies look at you and say, yeah, they say behind your back, yeah, that employee costs us an awful lot of money, and there's 200 of them. Boy, if we could get just as much work out of those people and only have 80% of those number of people, we'd save a lot of money. When companies think that way, they're going down. They're going down, badly down. Larry, good morning. Number 70, you gotta love it. 73 from 2001, and 75 from Not Your SoFi. Yeah, when companies start looking at employees as expenses and as liabilities, they're in big trouble. At the end of the day, they will sooner or later get hammered and will become extinct. They will be absorbed by something else. They will not be what they are anymore. It's the companies that look at their employees and go, okay, we got a good bunch of people here. We spend a lot of money and effort to bring together a good team. How can we keep them happy? How can we get more out of the people we have? And how can we grow the business like we really want to grow the business? Should we be buying other companies? Should we be expanding our company? Should we hire another 500 people and become even more dominant in the field that we're dominant in, or become the number, become one of the top 5 companies in our field instead of one of the top 15? What's our plan? We want to grow. We want to grow. We want to be better, but we want to be the best quality producer of whatever it is we make or do or offer. When companies think that way, that is the kind of outfit you want to be part of, because that's exciting. That's a growing company. That is an evolving company. That is a company that where you can get rich with the owners. It's when the owners try to make you rich too, coming along for the ride, then you're going, okay, this is great. We got great health benefits. We have great retirement benefits. We have great, mental health benefits. We get sent on, corporate outings. We get motivational speakers coming in. We have constant corporate events going on to build morale and keep everybody happy. This is the kind of company I want to be part of. I want my company logo on my T-shirt, and I'm proud to wear it outside of this company's office complex. It's when you take your jacket off and that the logo on the hat, you throw it in the back seat. You don't want to wear it in the open world. That's when you know you're with the wrong guys. And what can I say? That's how it goes. Anyway, welcome. Nazareth, number 76. Good morning. Number 77 here from Quick-Sick. Olivia, welcome. 79 thumbs up already. And this guy says, please don't say my name. Please don't say my name. This guy right here, this guy right here, this guy right here does not want me to say his name. So just so you know, if you see that, he doesn't want me to say his name. Okay, I won't say your name. Alex, there's always something we miss about home. Whenever I go into the world, I end up thinking it's lovely here, but why don't we why don't you drink more tea? Kid, good morning. Kid had a golf tournament at Ironwood the past few days. He won, but haven't been able to follow. Hang tight on my 130 GameStop expiring August 5, or are we rolling? If you're rolling closer to expiry. If you're rolling because you can do an advantageous roll now. Only if it's advantageous to you. And what do I mean by that? Can you buy back your 130 and sell a 140? Maybe towards the end of August into September for as much money or more money. In other words, move up $1,000 a contract in exercise price and have it not cost you any dough? Or can you move up $15 or $20 in exercise price for like 150, 160, 140, 150, 160? Can you do that for very little money? In other words, your contract would get you, if you were to be exercised, you're getting $2,000 more for every 100 shares you've written on, but it costs you $200 to do it. Cool. Obviously, if you roll to a higher strike price, you're closer to the market. And as the market backs off, and it will, it'll go past your and through your exercise price very quickly. And all of a sudden, your option is an out of the money contract, and it'll only have time value to its existence. And you may find that you did the rollover, you bought yours back, you sold the next one, you brought in, I don't know, you brought in $25, you brought in $35, and now it's trading at half that. Yeah. On the other hand, you do nothing, cross your arms. We're at 160 right now. Fine. Let it be at 160. You don't care. Wants to sit 160, let's sit at 160. But if it's going to back off after the split into the 125 neighborhood, you're going to go, this is great. I love this. I don't mind holding a 130 contract where the stock's at 125. Don't mind one iota. So you're going to win anyway. It's just a question of how's it going to happen, how's the win going to come through, and so on. And there it is. That's the deal. Okay, Ken, way to go. The kid, that's all stuff, man. That is awesome. Hector, number 80. John Bickley, Kent, that is awesome. Congrats. BP, we have a saying: rip off Burton with prices. Oh man, Zeta State, number 81, thumbs ups. Bama Babe, you know I'm here. W. Walters, I'm number 98. Trucker Tech, I'm 94. Burrow King Sound, number 53. Nexus, I'm 105. Thank you, everybody, for being here. Love the fact that you're all here. Nice to see you. Sorry, there are some folks who are not happy here or critical of what we're doing. Too bad. It is what it is. The world is what the world is. Let's move on and say thank you, everybody, for popping in here today and seeing us. It's great to have you. We're 27 minutes away from opening up the markets today. We're going to see what we're going to have happen here. We're going right now over to member-only commentary and keep the sad trolls out of the way. And, we'll leave it at that. Thank you, everybody, all of you who are members, those of you who are lurkers, subscribers, everything. It's wonderful. Nice to have you in here, and you are more than welcome to enjoy the show. Hope you are, and I hope you're not too worried about the future. I don't think you should be. If you're good at what you do, you never have a worry. All right, let me move on through here. Okay, we've got 114 thumbs ups going. This is awesome sauce. Thank you, everybody. Thank you to all of you out there who have been letting me know how long you've been a member of this channel. If you guys want to tell us how long you've been a member, you can hit there's a $sign down below the chat area. I think if you nail that, it gives you an option to post how long you've been a member. And I thank you for all of you who have been here. Some of you now for 17 months since I started memberships. Unbelievable. It's so cool. Beautiful stuff. Appreciate it. What else is going on? Wavy Gravy. I'm number 109. Fabulous stuff. Let's see. What else is going on? Let's go. Andrea, I don't get it. Like, take Apple, for example. After so many years of making tons of money, how can 1 or 2 bad years lead to leaving workers at home? Yeah, corporations are like bondholders. They're very fidgety, and you got to understand the mentality of public company management, top management. Every 13 weeks, you have to show your report card to your Wall Street backers, because every 13 weeks is the end of another quarter, and every 13 weeks you have to release earnings, expenses, margins, and you have to comment on what you're doing. And Wall Street, and of course the stock markets around the world, we're all the same. Investors love to see progression, positive progression. Sales are up, um, margins are better, um, margins have improved, um, margins are coming back to what they used to be when they were really high. New territory where you're selling product, um, um, more product being sold, new products coming out, old products being reinvigorated to grow product, new advertising campaigns. I mean, show us something to get us excited, keep us excited, to keep us wanting to be in your stock. That is the 13-week cycle that corporate America and corporate Canada, Europe, they all have. If you're a publicly traded company, you're on a 13-week rotation where every 13 weeks you got to have a conference call and you got to talk to all those analysts out there and let them know how you're doing. That's the price you pay being a publicly traded company. If you're a privately traded company, family owned business, you do your financials once a year. At the end of the year, you do your financials. You may have quarterlies done, and you may owe money to bankers or investors for parts of your business. Sure, you report to them, but at a much more casual level, not as formal or as structured as a 13-week pressure cooker that Wall Street has going with all the other markets. But that's how it is. And companies are under tremendous pressure to keep delivering the goods every 13 weeks. And they have to show the street that they're on top of trends and that they're ahead of the economy, not behind it. They're not reactive, they're proactive. And so investors like it when an Apple will say, in theory, we're cutting back expenses because we sense there's issues. Appreciates that because it shows the street that the company is paying attention to what's happening out there. What I say is, yeah, that's all good and fine. Thank you, Apple, for letting us know that you're um, holding back on hires, that you might be delaying or cutting back some divisions, capital expenditure. But that's telling me, the investor and the observer of investing, that your business is slowing down and that what you thought was happening 6 months ago isn't happening now or 6 months from now at all. It's different, and it's not good different. It's bad different. And that to me says, okay, the market might react right now with a little bump in the price because the company is being upfront with its investors and all that crap. But I look at it and go, yeah, but in 3 months from now, when the next earnings report comes out, there's going to be money missing, sales missing, earnings not there, margins not there for certain departments, divisions, and what have you that we thought would be there a year ago. And eventually, and sooner or later, the stock reacts negatively without warning. It reacts badly because enough people like me figure it out and go, oh yeah, gee, I remember like a couple of weeks ago, didn't they announce some, potential higher slowdowns and division slowdown? Didn't they say that? Maybe now is not the time to chase the stock. Maybe the time now is to sell some of these shares, go on the sidelines. Maybe the time right now is to buy some puts. Maybe the time right now is to write call options on the stock that we have. Whatever the you know playbook says, but all of it combined means no new money is coming into the stock to keep buying up shares at higher prices. It's more likely that more stock might come into the market through however many millions of people at the same time talk like the way I'm talking to you now individually, there will eventually be millions of me out there doing this. And out of the millions, there will be hundreds of thousands who will dump the stock. That will be their strategy because they don't write options or they don't buy puts. They just dump and they'll buy it back later at a lower price. Now, what the lower price is, I don't know. Is $10 a share lower, 15 a share lower, 30? I don't know. They're all different. All hundred thousands of them. They're all individuals with their own minds and they do what they want. But when they sell and they see the stock begin to falter, they all dump out. Because there's a lot of folks out there who are saying, well, I'll hold it for now. As long as it keeps going along, I'll hold it. But once it starts to back off, I'll dump it. Yeah, well, that's called the avalanche, all right? It begins with the charge gets set off at the top of the mountain and you see the snow falter and the crack lines appear. And then it's a full-blown avalanche down the side of the mountain that takes out everything in its way. That's when these folks pile in and really get it. Well, that's too late. You're already 20% lower than you could have been had you sold it a month ago when Bruce first told you about the fact that, hey, the company's cutting back. I'm saying to you folks out there, hey, write call options on Apple. Do not be afraid of upside. Enjoy the ride down. If your stock drops a little bit and you make a nice buck on the call, buy it back and roll into another call and ride it again. You will ride these moves. It won't be a straight down shot. It will do this. That's what Apple does. You're going to take advantage of volatility and you'll do just fine. Okay. Here we go. Tom says to us, Tom Crump, the Wall Street Bets army thinks that they're going to cause another short squeeze with this upcoming split. This is why GameStop keeps going up. How naive are these people? How stupid are they? I'm sorry, but that's not going to happen. You're not going to create a short squeeze because of a split. A stock split means you've created a lot more stock that can now trade and a lot more options that can now trade and a ton more options that can now be created. In the case of Google and Amazon, if you had 5 shares of those shares before the split, after the split, you have 100. You can now be an option writer. How many gazillions of new options are going to be written on Amazon and Google for the next year versus a year ago? A ton more. Shorters love stock splits. LUV them. They love stock splits. Stock splits are great because it puts a gazillion more shares into the system, man. Hello. For some reason, the Wall Street Bets people, and again, I'm not mad at them. I'm just, people like this and talk like this. What Tom is talking to us about. Very good point, Tom. People think magically the stocks are going to be short squeezed and they're going to go up. I ask you, who's going to buy this stuff to make that happen? GameStop can't even trade 3 million shares a day right now. And the split tomorrow. Where is any excitement whatsoever? You could say, well, Bruce, it's going up with only 2-3 million traded. Stock's going up even without volume. I say, yeah, that's true. It is. Why is that? Because people who own the stock are going, well, let's see how high it goes, and then maybe I'll sell some. Let's wait till the split, and then I'll sell some. Like, let it go to 160, 170, 180, 200, and then I'll sell some. First thing that's going to happen, they're not selling anything. Why? Because it's never going to get there. Who's going to buy it up to that? Who is going to buy it at 195 if they think it's going to 200? The reason you'd buy it at 195 is you think it's going to go to 500. The reason you buy it at 158 because you think it's going to go to 188 or 198. You're not buying it at 158 because it's going to go to 160. You're not going to buy it at 158 because it's going to 165. I mean, what are you? You're in for a $7 profit on a $158 stock? No, you're not. Not going to. No. People are greedy. They want big fat hits. This stock should be running like crazy already. And I mean crazy, 10, $20 a day. It should already be 200 right now. It's not. Trying to hold 160 here. Yeah, it's good. It's not great. It's good. Stock's been in this through at 10 when guess who bought stock for his account? He took it to 210 just on his move, and it gave it all back. That was a far more important move for the stock and powerful move on the stock than the split. If you add up all the shares that have traded since the split announcement was made, this stuff has gone from 113 to 160 something on whatever million of numbers of shares. How many shares traded in GameStop when we heard that our friend, the chairman, bought up a bunch of stock from 98 to 108 or something like that? He bought himself, was it another million shares or something like that? How many shares traded the 3 weeks after that when it went to 205? Way more stock than what's trading here. And guess what it did? It came all the way down. You were all here. You did the rollovers. You watched it go up, and you rolled over and over, and then you watched it come down. And many of you got exercised, and you just did this and bought them back later when they came back to you. Now we're only at 160 after the split news. This a year ago would have caused the stock to double in price. Didn't happen this time. Gone up like 40, 50 bucks a share, kind of. 113 to 63 is a $50 move. Isn't that enough? A $50 move from 113 to 163? That's a good move. But the volume isn't there to hold it. And now we're going to split 4 for 1 with 4 times as much stock available and 4 times as many existing options. Plus, anyone that has 25 shares of GameStop or more right now will have 100 or more tomorrow. We got a whole bunch of new option players coming into this market. We're going to have a whole bunch of new options being written starting this Friday and next week and the week after. 4 times as much stock than before is going to be in existence. Why would it go higher? It makes no sense. So this is where these Wall Street bettors are just thinking, what is there some kind of a mystical, invisible buying force somewhere out there that just is going to buy up all this stock miraculously? Stock splits don't make the company any money. It's not like GameStop's going to announce, oh, we made triple our money this month. It's not, the stock split has nothing to do with that. It's all cosmetic. So, look, I'm still a fan, but I'm also a realist. So I'm a real fan. There you go. There you go. Okay, let's see what's going on. Thank you, everybody. Thank you for being here. Way to go, everyone. You're going to make money. Malo is number 118. Wonderful. Jennifer, how you doing? Thank you. Nate, 1 year, 1 month. Welcome, my friend. Hector, Uncle Bruce, has inflation peaked? Don't know. Mirko, number 125. Deep Value Investing is a new member. I think Deep Value has come back. How you doing, buddy? It might just be a rollover. Thank you, my friend, for doing that. Chillin' with Uncle Bruce member. Thanks, man. Manuel, Ruben de Celis, if I get that, I don't know if I pronounced that right. Ruben, Manuel, thank you for being a member 17 months and is currently a Gold Bagel member. Thank you, my friend, for the notification on that. Appreciate that. It's great that you're here, and I thank you for your loyalty. Deep Value, welcome back. Because I think you've been away a little bit. I'm not 100% sure on this. John, Uncle Bruce, short squeeze is the attention getter they need to attract people. Lots of people grabbing a position in a kind of stock and then pump it up so on Wall Street bets so others join and hold their bags. Tiff, welcome back. I think Deep Value. Keith Gill said to watch the fundamentals of the company. Short squeeze is just a sideshow. GameStop is oversold. It has to respect its previous highs of 350. It has to reset. Alberto, to be honest, if a Moss, what is that? If a mother of all short squeeze does occur, I will sell at a profit and be done with it. I prefer to write on higher valued companies. There you go. Deep Value being done with the top stock of 01 Alberto. GameStop won't slow down in 2022. It has already doubled 3 times this year alone. Karim, less shares cause a squeeze, not more shares. Deep Value. Last time we had a GameStop stock split was in 07. The price went from 15 to 65 for years to come after the split. Not your SoFi, mine, all mine. Just keep riding that gravy train. Thank you, Bruce. I am back right on Deep Value. Nice to have you back here. Olivia, mother of all short squeeze, laughing out loud. I love it. We'll see how it goes. In the meantime, we can write options and make a ton of money, and the volatility will make us a ton of cash. That is the beauty of GameStop. The volatility will we'll be there. I think after the split, we can see $5 share moves between highs and lows after the split. That's like $20 today. So there's great volatility available. You want to write a $36 call and it goes to 32 that afternoon or the next morning, you're buying that call back for very little money. You're going to make just great money. And it goes back up to 36, you write it again, goes down to 32, you buy it back and forth. We're going to have fun here. Can't wait. It's 10 minutes until we open for trading, by the way. Let's take a look at the markets here and see what's going on. Just clear up my big SI pad a little bit. I think I see the Dow up 47. I think I've got S&P up 23. NASDAQ looks like it's up 184. So it's a turnaround on the markets since the ECB raised their rates a 0.5 percentage point. That's what seems to be going on at this moment. In Europe, the London market is off a 0.25 point. The German is off 0.43, almost a 0.5 point now, 0.47. France is up 0.5 point. We're mixed in Europe. Not a lot to get all excited about. Interest rates, looking at those, the 10-year U.S. is at 3% even. It was as high as 3.07. Now it's at 3. It's likely to go higher later this month when the Fed bumps the rates in the U.S. again. Germany, 1.28, a little calmer now. Italy, 3.55. Spain, 2.5. UK, 2.15 is where we're at on their rates over there. Okay. Oil right now is showing, come on. Oh, my God. What is this doing? Why isn't it reacting? Wake up. Okay, oil down 408 a barrel in Texas. 95.80 is oil right now. That's a good news for Americans, Canadians, Europeans. Oil going into the 90s, into the 80s, brings us back into the $3 range for sure on gas. This is huge. From $6 a gallon to $3.80, big difference on everyone's bottom line. Huge difference. We'll see. We'll see how it goes. Okay, I got the Dow down 70. Pardon me. I'm off on my I was off on my numbers. I apologize. The futures show that the Dow is off 70 points. We were lower than that, but we have given up some ground. S&P unchanged. NASDAQ up 47. Okay, we're just watching this very twitchy market in the last 8 minutes before we start trading, and then we'll see for real what's going on and where are we really heading with this puppy or not. Okay, thank you, everybody. Let's take a peek now at Gamestop for the moment. There we have it. GameStop is a pre-market 159.68, and that's a gain of 93 cents on 31,000. Where is the mother of all short squeezes? 31,000 shares pre-market? That isn't going to happen. Oh, no, that is not going to happen. Well, we'll see what's going on. Now, let me take a look at some of our other favorites, okay? Pre-market quotes just before we get started here in about 7 odd minutes. Rocket Lab is down 3 cents to 434. It gained 28 yesterday. We've got SoFi up 2 pennies to 6.99, gained 35 cents yesterday. GameStop up 93 to 159.68. AMC up 46 cents to 17.98. Definitely opportunities here to write $20 calls again. Matterport up a nickel to 4.44. It was up 30 cents yesterday. 23andMe is up a penny to 2.97, gained 13 cents yesterday. Spire up 3 cents, it looks like, at 1.40 a share, gained 11 yesterday. ATIP is down a penny to 1.30. It lost 6 cents yesterday. Smart Rent doesn't show any trades yet, and Sextera doesn't show any trades yet this morning. Apple up 90 cents to 153.94, $2 yesterday. Goldman gained $3 yesterday, 3.40, down $1.25 now to 320 bucks. Cisco was up a dime yesterday. It's down 6 now to 44.08. Tesla was up 5.91 during the day yesterday. Closed at 7.42. Last night hit a high of, I thought I saw 7.75 last night. It's at 7.65 right at the moment, up $23. I don't know if that can last. I really don't know if that can last. Arc Innovations gained 231 yesterday. It's down 28 cents at the moment, 47.84. Microsoft was up 274 yesterday. It's now down $1.80 in the pre-market, 260.47. Bed Bath Beyond gained 34 yesterday. It's down 8 right now to 552. Pfizer was down 56 yesterday. Now 17 cents lower today to 50.66. Boy, is it fun writing options on those. HPQ, Hewlett Packard, gained 11 cents yesterday to 32.94. It's up 21 more now to 33.15. Perfect time to look at writing 34s or 35s. Fun times. Carvana gained 4.53 yesterday. It's down 77 cents right now, 26.61. And Twitter was up 11 cents yesterday. I have no change at the moment. 39.60 is where we're sitting at right now. Okay? That is what I'm showing on our pre-markets with 5 minutes left to go. Tesla shares climb after car maker got tough quarter out of the way as Wall Street eyes production ramp ups. That's great. I'm happy for Tesla with the production ramp ups. I love Teslas, but the supply chain issues haven't gone away. The margin problems haven't gone away. And there's a possible slowdown in the economy. And if we get the sense that Tesla's pre-orders are weakening just a little bit, that could be the beginning of a slide. Remember when Netflix couldn't do anything wrong? They were adding millions of new subscribers every quarter. And then about 4 years ago, we began to notice how Netflix's numbers seemed to top out as to how many subscribers they really had. And they shifted their talk where they used to say, oh, we got so many million Americans who are now members of Netflix. And then Netflix played the game of, we're adding Netflix subscribers from around the world. Our global audience is limitless. And then in the last year, guess what happened? Their numbers are backing off now. They're losing subscribers because Netflix has the constant problem of a company that doesn't produce enough of its own content. They started producing their own content about 10 years ago because they realized we're going to lose Disney. We're going to lose all these movie companies. They're going to walk on us because they're going to create their own service. Disney did it. Other companies are going to do it. And we're going to get knocked out because we can't afford to pay to rent all these movies anymore. So we better make our own stuff. In other words, they're becoming an HBO. Well, why would you want to pay $18 a month for an HBO lookalike with crap movies that used to have classic and great movies? Why would you want to pay that? And so the stock is from 700 to 200 a share. How much do you want? Tesla, if they start to lose orders, if the 25 to 40-year-old buyers that used to fuel Tesla's massive quest for vehicles, if they get crushed in a recession, or they get laid off, or they feel they might lose their jobs, or they can't make as much money as they thought they were going to make, they're going to cut back and hold off on a Tesla. They might wait a year or two before they order their Tesla. Get enough millions of those doing that kind of a thing, Tesla's future orders start to back off. And if that starts to happen, you're going to have the analysts going, oh, wait a minute. Projected sales of Teslas, they've got these mega factories now running, capable of making 5 million cars a year. They might only need 4 million. What if that happens? It's still 4 million cars a year, but it's not 5 million cars a year. It's not 6 million cars a year. Oops. This is the thing with growth that is a pain. Once you show growth, the street expects you to keep adding to growth. There gets a point in time where you can't keep doing that. There are already so many million Teslas on the road. People who don't want a Tesla anymore, for whatever reason, can sell it. People who want to buy a Tesla have an option. Do I buy a new one or do I buy a used one? They got that option. As each year goes by, more Teslas will be on the road. In 5 years, there could be 10 million of them. In 10 years, there could be 30 million of them. There will eventually be tens of millions of Teslas out there, some in bad shape, some in great shape. And buyers will have choices. A 10-year-old Tesla, a 5-year-old Tesla, a 1-year-old Tesla, a brand new Tesla. Or do I wait a year before I order a Tesla? Once we get to that point in time, I don't see 2 million Teslas in back order anymore. I just don't see it. They've got the big SUV, the small SUV. They got the big sedan, the small sedan. They're bringing out this truck that looks like nothing on the road. I don't know how popular that's going to be with the traditional truck market. And then what? What are you going to do now? What are you going to do in mass volume that's going to take the world by storm? You're going to bring out a $25,000 car? No, you're not. You're not going to do that. There's no money in it. You can build a $25,000 car for $25,000, but you're only going to sell it for $25,000. You're not going to get $40,000 for a $25,000 car. People will buy a used Model 3 instead. They're not going to buy that. Victim of their own success could be the issue. We'll see. We'll see. I think we're open. I see this symbol crossing my screen here, and I have a suspicion we're trading now. Welcome, one and all, to the show, the carnage, and the fun times. And option writers unite. I think you could get rich. I think you're going to do very well here. If you're an option writer, I think you're going to have a field day with the kind of money you're going to make in this market for quite a while yet. And even in good markets, you're making money anyway. I love it. Welcome all. Welcome every one of you. It's nice to see you here. Tesla isn't a car company. They sell computers on wheels. There you go. Thank you, everybody, for being here. I got the Dow off 141, it looks like, to start the day. Let me just kind of get my biggest iPad to wake up. We're down 8 on S&P, and we're up 7 on NASDAQ. Now we're negative on NASDAQ, half a point. Oil down 391 to 95 something. 96.14 on oil, down 374. Okay. Tesla has a PE ratio of 100. So right now they have to make profits they make for a century to match the share price. That's a lot and a long time. And there you have it. There, it's true. Tesla is $769 to start. Perfect price to start shorting it. Perfect price. If you're going to short it, here's where you want to short it. Let it have this nice little pop, blow some off, and buy it back $20 less or more, depending on what it does. But you got to really, you better have an iron stomach to do this. And some cash. Google down 42 cents. The Dow down 147. Matterport is up a penny. A Smart Rent up a quarter, which is nice to see. 511. We've got. Hold on. We're shifting. We're now negative everywhere. All right, we're down 147 on the Dow, down 50 on Google. We're down a penny on Matterport. We're down 5 on Smart Rent. Tesla still up $33. SoFi down a penny. Gamestop down 30 cents, 56 cents. We're down to 158.19. Spire unchanged. Apple up 74. AMC up 68. ATIP off a nickel. Rocket Lab up 12. Cyxtera down 8. ME down 4. Pfizer down 27. HPQ off a nickel. Now it's up 3 cents. Cisco up 24. Twitter down 4 cents. Home Depot down $2. Carvana off 54 cents. Vanik Vectors up 140. IBM down $1. Microsoft down 260. Goldman up 150. Meta down 236. Amazon up 43. Bed Bath Beyond down 18, BlackBerry up a penny, Royal Caribbean down 266. Carnival announced $1 billion stock sale. They're going to do now, their stock's off $1.40 to $9.69, a 14% haircut today on Carnival. Yikes. Target down 94 cents, JP Morgan up 24, Costco down a quarter, Walmart up 36, Nvidia up 165, Disney down 72 cents. American Airlines down 76 cents to $14.45. Netflix down $1.70 to $2.14. Moderna down 59 cents. Those are our early quotes, and we'll see if how the markets settle in and how they're going to move on going forward. On GameStop, the high today 159.72. The low 156.45. We are at 157, down 175. On GameStop right now. Mirko makes a good point about PE multiples. And I want to talk to you about PE multiples. There's a great article today in the Wall Street Journal talking about the past history of price earnings multiples over time for indexes, the actual indexes. The S&P 500 price earnings multiple historically has had wild ranges from highs to lows. One of the lowest points, one of the lowest PE multiples ever recorded for the S&P 500 took place during the first year administration of Ronald Reagan's White House. Uh, Ronald Reagan blamed Carter for everything bad in America and got a landslide victory. Within a year or two of his presidency, the markets crashed out. We're really bad off, and we had all kinds of problems in the markets, including in 1987, towards the end of his presidency, the single largest drop in market history for the Dow Jones, 22% loss in one day during Ronald Reagan's prime time presidency. In any event, in 83, the PE multiple of the entire S&P 500 was 6.6 times earnings. The street was going, I don't want any stock whatsoever. You know what I want to buy? I want to buy bonds. Canadians, investors, they would call me up. I was a stockbroker back then. They'd call me up. They call Jen up. They call all of us up, and they say, tell me this, Bruce. Why should I consider buying stock on any company you tell me about? I don't care who you tell me to buy, IBM, General Motors, Exxon. Why would I think about buying anything when I can go to my bank, I can go to the teller, and I can give her as little as $50 or more in $50 increments? I can give her 50 or 100 or 150. I can give her up to $5,000, and I can give her $5,000 for me, 5,000 for my wife, 5,000 for each of my children. And I can buy a Government of Canada savings bond that the Government of Canada guarantees me this money, and they will pay me 19% interest. Why in God's name should I give you any of my money? Now, that is a tough argument to make up. I believe the excuse I would use was inflation is 20%. You're losing money. But I would say to my clients, on the other hand, the Government of Canada is guaranteeing you 7 years of 19% interest on this deal, or it might have been 5 years at the time. It was a guarantee lock-in of so many years at that kind of money. And you have to gamble whether or not inflation will stay at this level for the next 5 years while your money is in that bond. Your call. If you sell the bond before the date, maturity, you get nothing. Just get your money back. So you better be sure that whatever you give them, you don't need or won't need, and that you are guaranteeing or gambling that the inflation rate will drop. And then the other interest rates will drop too, and you'll be the winner. And that was the dilemma. Now, the reality was a lot of my clients didn't call me with that question. I'll tell you why they didn't call me. They didn't call me about that question. They called me, but what they asked me was, Bruce, I put 20 grand into the market 2 years ago. You've moved it to $30,000, and I love you for it. But in the last 2 years, it's gone from 30 to 10. What do we do now? And I would say, well, you could put it into the Government of Canada savings bonds and get 19% interest, and over time we'll build back your money. And they go, no, I don't want to do that. I think inflation will come down in the next couple of years because of all these anti-inflation programs going on. I also believe that the markets are going to turn around because we're at these historic lows. And I think my portfolio will climb faster than 20% versus the account. And that's exactly what happened. The other thing that also was a reality is I didn't have any clients of mine who said to me, I got 50 grand lying around with nothing to do. I got all this money. I'm going to buy Canada savings bonds with it. Nobody had 50,000 lying around. Nobody had 10,000 lying around. Every dollar we had lying around was immediately spent. Why? Because it was depreciating at 20% a year. You didn't have cash. You were an idiot if you had cash in 20% inflation. You spent the money immediately. You got yourself a new car before it went up 15% more in cost. You got a house. You bought a house as best you could and hung on to it because it was going up 8, 10, 12, 15% a year in value. That's what you did with stuff. You bought stuff because it was worth more than money. Money was losing value fast. And that's what we have going on right now. We have money losing value because you go to your grocery store and it's more expensive this week. And next week, it's more expensive again. That's what's going on. We have to really watch what's happening here. Okay, let me tell you what's going on. Enough of that. I think we got the Dow down 143 points, if I'm not mistaken. We've got Google down 73 cents. Make that 87. Matterport is up a penny. We got SmartRent down 2. We got Tesla now 781. Perfect time to short, up 39 bucks a share. SoFi 698, up 1 penny. GameStop down 248 to 156.27. The low of the day has just been hit. We're at 155.56 on GameStop. We're now down 319 a share. We're dropping on GameStop right now. Let me double check over here. We've got the U.S. market now 157 lower. S&P down 8. NASDAQ up 8. Oil down 394. GameStop 155.56. That is the low of the day on GameStop right now. All right. Not surprised to see it. Wouldn't be surprised tomorrow if we're trading at 35 a share, 140 bucks. We could trade at $32 a share next week. It's 128. I wouldn't be surprised. I just, the party's over. We've had the party. There might be a glitch here, a little pop. Sure. But I think the party's over. We'll see. Back to PE multiples, by the way. GameStop trading at 100 times multiple, says Mirko. What an incredible statistic. Under Ronnie Reagan, we hit the low of six something when inflation was out of control. Unemployment was massive. Governments were running deficits. Corporations were in debt to their bankers like crazy. Nobody wanted to issue many money on bonds. They didn't want to issue stock because the stock wasn't doing well. It was bad. During the housing crisis, 2008, the financial crisis, the PE multiples got down into the 20s after being in the 30s. And we hit the 40s for the PE multiple during the dot-com bubble. After Ronnie Reagan was long gone in 2000, we hit the dot-com bubble, 40s. We were in the PE multiples. Just November, just 7 months ago, 8 months ago, 9 months ago, November, we were in the mid-30s. Right now, we're in the mid-20s for PE multiple for the entire S&P 500. That's too high. Because here's the problem. We saw the markets hit all-time highs in November. By the time December and January rolled around, we backed off quick on the markets. So the PE multiples came down as well. Why? Inflation. And also talk of higher interest rates, which began in February, March, April. So we got now the double whammy: higher inflation, higher interest rates, lower markets, lower PE multiples, except for one little problem. The little problem is that of the 500 stocks in the S&P 500, we haven't yet seen the next shoe to drop, and it's going to drop. And that shoe, lower earnings from the 500 S&P 500 companies. They're not going to make as much money next year as last year. They're not. Inflation is higher. Interest costs have gone up. Sales are under pressure. Margins are under pressure. Smaller earnings are coming our way from corporate America. Smaller earnings means the price earnings multiple will go up if the stock does not drop in prices are, lower earnings coming in, you're going to have a much higher PE multiple. That won't stand. There's no way. We're not inflation like that. Interest rates aren't going to zero like that. They might never again. We're going to time all 500 S&Ps. They will be lower in price, so the PE multiples will stay lower. Because the PE multiples cannot go to 30, 35 if the stocks, where the stocks are right now. They have to go down in value. The only way the market goes higher is if corporate America and corporate Canada, corporate everybody, making way more money, more money per share. The only way you're going to do that is increase sales, increase profits, increase margins, or buy back all your stock and reduce the number of shares outstanding. The problem right now for the corporate world is you want to buy back your stock, you better have excess cash lying around. If you don't have excess cash, you better find cash lying around. Where are you going to find cash? The bond market? Not right now. You're not. Not at 7, 8, 10% interest. Why would you borrow money as a corporation at 7% from the bond market to buy back your stock? You're not going to do that. You're going to borrow money if you need to borrow money to survive economically. That's what you're going to do. The first thing you're going to really do is cut your costs. You're going to push your marketing a lot to try to keep the momentum going, but you're going to try to reduce your costs. You may also reduce your production numbers. Produce fewer iPhones, produce fewer cars, produce fewer sofas, whatever it is you build, whatever it is you make, produce less of it because the demand is there, and survive the downturn. That means higher PE multiples are coming, which means the stocks have to drop in price to keep those PE multiples lower. And if the street demands that the S&P price earnings multiple has to be 15, not 25, we got a serious haircut coming from here. It hasn't been insisted on yet, but it might be. And that is what we have got to keep an eye out for. And that is why you, as option writers, are rubbing your hands going, oh, this is great, man. Keep talking, man. Just keep telling me this stuff, Bruce. Do not fear the upside. I love this. As an option writer, I don't have to worry about a stock doubling in price on me. True. Now, there will be companies out there that will have a good run. That's always normal. But overall, we may have companies struggling to hang on to the values they have. And I'm talking about the high PE multiple guys. That's who I'm talking about here. Not talking about the small SPACs we love to follow. I'm not talking about those guys. Those guys are growing. They're not shrinking. They're getting better. But we have to keep an eye open on high PE multiple players. Let me take a look here at a couple of these. We got Cisco at 15.6. That's not too high. Twitter doesn't have a PE multiple, doesn't make money. Home Depot, 19.1, not too high. It's under 20. IBM is sitting at 20.79. That's right at the line of acceptability. Maybe a little lower, maybe, but they're doing all right. Microsoft, 27.06. Too high. Microsoft is trading too high for its PE multiple. This is what we're wondering about. Goldman Sachs, not a problem. 6 times earnings. No problem on Goldman Sachs. Meta Platforms, Facebook, is now trading at 12.81. It used to be in the 20s. It has already corrected, but it's a $187 stock, $181 stock for Facebook. Used to be $2. There's your haircut, and it's already been had over here. Amazon is trading at 54 times earnings. What's the future of Amazon stock? It's not going to 200 a share. It's 121. Where is it going? 56 times earnings. Guess who's going to have cutbacks on orders? Amazon, because they sell millions of items all the time. Well, guess what? If there's an economic slowdown, Amazon is on the front lines of an economic slowdown. That stock is priced too high on its PE multiple. Target trading at they don't have a people. They're losing money right now. Costco, 41 times earnings. That stock is 50% too high. It's double what it should be. It should be trading at $260 a share. It's trading at $527. There's downside here. You cannot sustain a 40-time earning multiple and ignore reality, economic reality. There's a reckoning coming. Walmart, 28 times earnings, too high, still too high. Nvidia, 47 times earnings. This used to be 100 times earnings. It's now 40 times earnings. The stock was 346 earlier a year ago. It's now 178. But the good news for Nvidia is that they are likely to keep growing their earnings because they're into the chips that the business wants. Maybe the growth rate will moderate a bit, but it's still a growth rate. And so their multiples will come down naturally. But 170, 200 is the upside on this stock, not 300 right now. Disney, 66 times earnings. No way. This stock has to go down by 2/3 has to go down to $35 a share to get a 22 times multiple, or they better earn more money. I don't know about earning more money. American Airlines has no PE multiple. They don't. Netflix, 18.6. They are where they're supposed to be. They are where they're. So the momentum going forward for Netflix is the question. They want to go to that could cost them on their high end, pure content, no ad business. So this stock is still subject to all kinds of issues. Yeah, yikes is what I say here. We've got companies that are trading too high on their multiples. By the way, on Apple at $153.87 a share, Apple right now is trading at 25 times multiple. And if the street says 15 times multiple is where we want you, then we got a 40% haircut here. I'm just saying it's possible. Not guaranteed, but we'll see how all this plays out. All right. Back to the markets. We're into the markets now. What is it, 20 minutes? We are Tesla at 783, holding $40 gain. Be the perfect place to short this stock. SoFi 702, up a nickel. Make it 703, just popped up again. GameStop 153.85. We're down 480 on GameStop right now. The volume 410,000. Very quiet volume. But it is off, no doubt about that. SoFi at 702, 703. The volume is 2.58 million. So okay, an okay start for SoFi. It's okay. We're up 6 cents at the moment. Spire's down 4, Apple's up 72, AMC up 27, ETIP down 8, Rocket Lab down 11, Xterra down 15, ME 35, ADU down 14. So there's more negatives than positives. The Dow down 140 points, S&P off 6, NASDAQ 7, oil down 328. And there is where now. 153.70. We're down $5.05 on GameStop. All right. Anyway, we've got people talking about the connection not going too well. We're having issues with connections. I'm not sure if it's from this end or not. I'm going to try to close some of my tabs and see if that helps it anyway. I don't know if it does, but we're running into some issues this morning, apparently. I have a feeling a lot of folks are getting online and at this hotel, and that might be interfering with my Wi-Fi. It's possible. All right. It's horrible when he starts talking about something interesting. Sorry about that. Nick, thanks for the 166 thumbs up. Appreciate it. Let's see what else is going on. Nick, I've been shorting a Tesla in 10 share increments. So far, my average is 780 on Tesla. Beautiful job, Nick. That is a really good job of doing this. Stocks at 781. You're short at 780. Goes higher, sell more. Goes higher, sell more. I love the way you're doing it. Let's see. What else is happening here? Nazareth, the Chinese finally have Uncle Bruce IP address due to his TikTok from yesterday. Guess is a hit squad is on its way. There you go. And we've got issues with our show here. No question about it. As far as the quality of the stream, sorry about that, folks. There's nothing I can do about it. Just hoping it'll come through for you, okay? As we're just part of the system here, as much as we're at. Thank you all for hanging in there as best you can. I do appreciate it. Let's see. Spicy Android says, I'm always hearing people say, don't fear the upside. If I'm writing a call and the market keeps going up, I'm losing money. Am I wrong? Yes and no. If you're writing an out of the money call and the market goes higher, the stock you own is going up in value, or the poor man covered call you have is going up in value, where the call you've written is going up in value, but it will not go up as fast as the market is up because time is eating it up. And then you can do rollovers. And you buy back your call that you wrote, write a new call for further out at a higher strike, and you keep going. Because sooner or later, markets back off. And when they do, they back off badly, quickly, suddenly. The GameStop right now, 153.22, down 553 in the first 24 minutes. We're down 550 on GameStop. That's quick. That's really quick movement. All right. SoFi, 705, up 8 cents. Austin saying, let's go, baby. I'm thumbs up, 174. LL, I'm number 180, right on, spicy. Okay, I got you. I'm with you. Coyote, if you have time on the calls you wrote, no one is forcing you to buy back at that moment. Exactly. The only time you do a rollover is when it's advantageous. If you're up against the wall for the last minute of the day, I get it. You have to buy it back. You want to do a rollover, I get it. But if the option chain shows you an opportunity to make a rollover that works for you, where you can increase your strike price or write the same call you've got just further down the highway in time for way more money, do it. Make the time, get paid for your time. You get paid up front for your time. That's the other beauty of it all, is you can take that money now. Coyote, wait for time to pass and your buyback and write into more time. Take in that time money and let it get. There you go. Coyote's got it. Coyote has it. That's exactly it, Alberto Coyote. You have become a champion, Spicy. I'm taking the rolling classics and the stink bids. The sooner the better, my friend. You want to do these. You guys have got to watch my classes. They're 2 hours long each, all about exactly what we're talking about here in detail, but in plain English. It's worth your time to check it out. Tesla's up to 783, says Hybrid Duncan. Yes, 784.90, which means Nick will short even more, raising his average. Beautifully done. Awesome. These new hires by SoFi just got a ton of stock yesterday. Rock and roll. 706 on SoFi, up 9 cents. 154.23 on GameStop. The low trade of the day on GameStop now has been 152.72. That has been the low of the day. I have 160. So we've got a range here of 728 already, and we're only at 154.67. So this stock is under pressure today. Thank you, Coyote. So spicy. Spire, is it possible that Matterport runs next week as well to 550? Anything is possible. This stock is so underpriced. It's ridiculous. Earnings are coming out in the next few weeks. Be careful. We'll watch for that. We're down 65 on the Dow. We've got all the European markets in the red. We're up 3 on S&P. We're up 30 on NASDAQ. We'll see if this market can hold the 2 gains on the 2 indexes that are up, or will all 3 eventually cave and give up some ground because they've had a good run lately. Tesla 785 up $42. Tiff, a spicy Android. For example, I got a 107. I got paid 107 for a Hewlett Packard 3150 August 22 contract. The price right now is $23.90. Okay, I'm not sure what's going on here with the $23.90. So after subtract premium, I got down 40. However, I can roll in 3250 call. I won't lose money. All right, something not adding up here. I'm not quite sure. In the meantime, my stock is up from where I wrote 3150, so it's still a win. Again, I'm trying to figure out your message. So you received $107 for a 3150. Oh, I think I know what you did wrong here. I think you have one digit out of place. Let me double check. Okay, yeah, the stock right now is 32.93. So you wrote a 3150. The stock right now is 32.93. And at the moment, I'm down 40 cents. However, I can roll into a 32.50 and I won't lose any money. In the meantime, my stock is up from where I wrote it, 31.50, so it's still a win. Exactly. His stock is worth more, and he'll roll into better options. It's all good. 32.90. There you go. We got this figured out. Spicy level. I tried to highlight your name. Austin, there's one nasty virus going around the Midwest. Starts with fever, then headache, then nose and throat, then a cough to cap it all off. Lasts about 2 weeks. Wash your hands. Laugh out loud. There you go. Got to be careful out there at all times. The market is now down 67 on the Dow. We're off 67 points. We're down 75 cents on Google to 113.95. Matterport, 444 up a nickel. Smart Rent down 2 cents to 509. Tesla, 786.91 up $44. Perfect time to short it. SoFi, 705 up 8 cents. GameStop, 155.07 down 368. Volume on GameStop is 410,000. The low 153.06, 152.72, depending on which device you are watching this on. Devices acting up today. GameStop still down on the day around 155.04 right now. Alrighty. Going back to my lathe, so spicy. Splair, at least SoFi is green at the high from 95 days ago. Slowly, I think I made a mistake and lost 2 Matterport instead of winning 2 Matterport shares. I wait probably until tomorrow. Rock on roll, Splair. Karim, where's the person that eats veggies, takes walks, and drinks water, laughing out loud? Austin, tomorrow's the end of another week, and that means another $100 million added in SoFi deposits. It's like $20 million a day, 5 days a week. That's how much cash is going into SoFi's bank from investors that want to earn interest on their money. It's incredible. They are growing big time. That's $5 billion a year in deposit growth for SoFi to then lend money out. Yeah, that's pretty good stuff. SoFi 708 up 11 centinos. Thank you very much. GameStop under 155 again, 154.95, down 380. The Dow down 64. Tesla at 790. 790.74 on Tesla. Keep shorting more and raise your average. And as it backs off, you're in the money. If you can afford to do so. It's the shorter's game that has to be played. Coyote, SoFi will not dip anymore, it seems. Quite the run this week. Austin, 5.2 billion a year. How long can we stay under $10 a share, right? Splair, is something expiring on Matterport tomorrow? Hopefully not. Options are, but that's typical. Man, SoFi is moving nicely this week. What took it so long? Austin, Coyote, fingers are crossed. SoFi now 709 up 12 cents. GameStop 155.28 down 347. The Dow down 64 points at the moment as stock is markets are backing off right now. Let's go. Interesting stuff. The Dow now dropping again. S&P up 2, NASDAQ up 42, oil down 303. Looking at the Dow Jones, we're down between 60 and 80 now, 84 points. We're off 84 on the Dow. We're backing off again. GameStop 155.10 backing up again. SoFi 708 up 11. Tesla 790 up 47.97 right now. There is where we're at the moment. And again, Manuel, thank you for being a member for 17 months. Deep Value Investing, welcome back to the party, pal. Nice to have you here as a returning member. I really do appreciate it. Thank you for those of you out there who are throwing those neat emojis around. Wonderful idea to make the market work for you. Can't agree. I can't support you more than what I can support you. I think it's a great idea. Put those neat emojis out there. Absolutely. And let the world know that you mean business. The markets cannot go against you. When the neat emojis are being employed and deployed, it always works out. Tesla 789. Look at that. It's backing up. SoFi 708 up 12. GameStop 154.94 backing up again. And here comes Bill. And here comes Duncan. And here comes Splair and DH Ruda. And here Austin is in on it. Here we go. They're going with the neat emojis. T.O. the goat. Here we go, baby. Not your SoFi. All mine. Duncan, thank you, everybody, for all of these neat emojis. Larry Titus, Nazareth, sell my house fast enough on Marlboro. Thank you, guys. The system is being crashed right now with all the neat emojis popping up like crazy. Flint Creek Soap Company is here. How are you doing? Welcome one, welcome all to the channel today and to the craziness. Tiff is doing it. We're all in on it. We're overwhelming YouTube with the neat emojis. We have 186 thumbs ups, baby. We're doing it. It's all good times. Thank you. Thank you all for joining in. Bama Babes on it. There we go. You can't stop this. You can't stop this. It's impossible to stop it. Too much fun. We're down 150 on the Dow. We're backing off. Google down 109. Tesla 787. It's backing up. SoFi 710 up 14. It's not backing up. GameStop 154.41. 154.39 now. Coming back again, dropping off on GameStop. 154.06 now. Another dip. We've got Spire down 3.5. Apple is red, down 8 cents. AMC only up 3 now. It's backing off 17.55. ATIP is down. Rocket Lab is down. Sextera is down. ME up 2 cents. Pfizer off 60. HPQ off a quarter. Cisco only up 13. Twitter down a penny. HD is red, down 111. We've got IBM down 230, Microsoft down 280. We have Facebook, Meta down 76 cents, Amazon down 37. We're going red, people. We're going red. Down 200 on the Dow, and we're down 11 on S&P. We're down 1 now on NASDAQ. All indexes are red, and that means option writers are going, okay. Oh, okay. Let's see what this is going to do now. Now what's going to happen? 153.80 on GameStop. We're down 4.95. Coming down on the GameStop, only $1.08 away from the low of the day again. Back it goes. Nick, I've got a 783 average on my Tesla, and it's at 785. Right on, Nick. You've been moving it up, and you're only a couple of bucks away from now making money. I love it. Flint, thanks for all the orders, Bagel Gang. I so appreciate it. Times are tough and rough, but a good business always adapts. So way to go, Flint Creek. Glad that you're getting some support from my viewers. Help out Flint Creek Soap Company. Check out the website. Just look it up on Google. Flint Creek Soap Company. Find it. You can do orders online. We gave away free samples of Flint Creek Soap Company at our meet and greet in Ontario, December 17th last year. Can you believe how long that's been? It was a good time. Oh, well appreciated. Well done, Flint Creek. Thank you for your support of my channel. Alberto, can you have... BA drop for me? Can you get Boeing to take a dump for me? I'd really appreciate it, Bruce. Boeing is up just 22 cents, and it did hit today 159.78. It's 158.60 now. Already touched 156. We'll see if it does another dip. Wouldn't surprise me if it does. It's not making money. Boeing is in the red. We'll see, my friend. Duncan, Bama, hello. Alberto, Flint, I can't wait for my order to arrive. Testy Donkey, come on, HPQ, get below 32, please. Alberto, your order arrives tomorrow. So much love. Thank you, Flint Creek. Awesome. I've never been more jacked for an earnings call than this quarter for SoFi. Full quarter bank charter, Technisys, 1.5% interest, 110 million weekly deposit. I might need to calm down here. This is exciting. Alberto, Flint, thumbs ups to you. Nick, it's just too strong. Maybe Kathy Woods is buying with her unlimited dough. Tesla 780 coming down. Tesla's coming down. Nick, you're making money now. Nick is making money on 783 average, and he's sitting at 780.64. Nick, let's see how rich you're going to get today. This is exciting. SoFi 699 up to GameStop 153.60. Backing off. We were as low as 152.72, and we are jumping around a lot on GameStop. We'll keep an eye on that. I now see a 155 price. We're jumping around here. John, Flint Creek, thanks for the fast order turnaround. Looking forward to trying out your products. Right on. Thank you all for sending an order Flint Creek's way. Always trying to support our viewers. Fantastic. We got the Dow down 173, it would appear, 174. We've got Tesla 787, trying a little dead cat bounce here. SoFi 711, a little bounce, up 14. GameStop at 155.07 right now. We'll watch all of this going in to the day today. Thank you, all of you, for joining me last night. We had Uncle Bruce Primetime Live last night, 8 o'clock. Wednesday nights. We'll be on next Wednesday as well. It was a good show, great questions. Those of you who are option writers, option writer wannabes, this is your chance to hang out with yours truly for a bit out of market hours. And we cover all kinds of topics over there, and we had some good chats last night. Fantastic. Thank you, all of you who've watched it. Those of you who are watching on the rerun as well, make sure to hit the thumbs up for that if you're watching on the rerun. Thank you, one and all, for that. I really appreciate it. Those of you who've become gold members, to take advantage of all of the perks, thank you for becoming Gold Bagel members of this channel. We love you for that. I try to go live every day during market hours before 8:30 for a trade alert for Gold Bagel members. This morning I was a little late, but we squeezed one in. And of course, Wednesday nights, it's all about Primetime Live. Wednesday nights, 8 o'clock. Thank you. And I salute you all with knee emojis. And I hope they take your stocks where you want them to go and take your options to oblivion so that you cash in big time, big time, big time money, because you all deserve to get rich, rich, and richer. Thank you very much. Let's see here. What else is going on here? Tiff, Austin, I take your SoFi earnings excitement and raise it by Spire earnings excitement on August the 10th. Nazareth, GameStop looks like it's a battle of the 155. Flint Creek, John, your order should arrive tomorrow as well. Thumbs ups there. Coyote, SoFi keeps shooting up all week long. We got a 712, 15 cents right now. Austin, Tiff, I share that excitement with you as well. I loaded up on Spire recently, bag holding about 12,000 shares. The CEO interview got me to buy more. He did his job. Laugh out loud. Larry, I'll catch the rerun. I was at a comedy show last night. Awesome stuff. Austin, both are in my calendar. John Bakeman, hey, Johnny says, Austin. John, on my calendar as well. Hey, Austin, what's going on? Thank you all for being here. We're down 184 on the Dow. We've got Tesla at 786. We got SoFi at 713, up 16 cents. GameStop, 154.76, down $4 this morning. Watching this market closely to see how it does. You'll be able to catch me again later today, of course, at 3 o'clock Eastern time, the last hour of trading. I'll be live as well today. We'll watch the close together and see how this all works out. Look at the Google down $2, 207 down to 112.74. Anybody writing Google calls? There's some money being made on these swings on Google. 215-point drop on the Dow, 14 on S&P, and 8.8 on NASDAQ. The markets are giving up more ground. Tesla trying to defy the markets, holding a 44.80 gain at 787. This is short territory here. SoFi 712 up 15 cents. GameStop 154.06. Looks like 154 is in jeopardy again. We might go through that. Spire down a nickel to 132. Apple 152.72 down 32 cents. AMC up only 14 cents. ATIP down 4.5. Rocket Lab down 4.5. Cyxtera down 25 cents. ME up 4. Pfizer down 56 to 50.26. HBQ 32.65 down 29. Cisco up only 4 cents. Twitter down 7. Home Depot down 85 cents. Carvana up $1.17, trying a rally at 28.55. Robinhood up 4 to 9.45. Vanik 228.21, up 2 cents. IBM down 2.55. Microsoft down 3.43 and dropping. Goldman up 1.99. Meta Platform down 1.92. Amazon down 75. BlackBerry down 16. BlackBerry is up to Bed Bath Beyond down 16. Royal Caribbean down 3.32. Carnival down 1.43 to 9.66. They're down from $11 to here. They're trying to raise $1 billion by selling stock. Yuck. Not doing well. 228 on the Dow. The dip is intensifying. We're down 234 now on the Dow. Tesla 786. SoFi 708. GameStop 154.29, down 446 on the day for GameStop. Last volume 602,000 on GameStop. Volume on SoFi at 708, 4.8 million. Tesla at 785.23, is still up $42, but backing up a little more. The Dow now down further. 257 is the drop on the Dow. This is low territory right now. The low of the day right here, 257 points. We've had a real drop in 15 minutes, a big one. We're down 270 now. 23-point drop on S&P, 43 drop on NASDAQ. NASDAQ's getting in on the negativity. It's coming in. We're down 0.86 on the Dow, 0.59 of a percentage point on S&P. We're down 3.5 on NASDAQ, and it's getting worse. Excuse me. There we go. 270 is the drop on the Dow. Okay. Tiff is saying, come on, HPQ. Drop to Papa. I'll catch you around 31.50. I'll be there for you. I'll be there. 32.58 down 36 cents on HPQ. Tiff, it's coming. Let's go. John, everything's insanely priced. And let's go. Let's see how this all works out. Thank you, everybody, for being here. We've got the Dow down 278. Google down 207. Matterport still up 4 cents. Smart Rent down 4. Tesla 786 up 43.64. SoFi at 708 up 11. GameStop just dropped 153.75. Just went through 154. Hot knife through soft butter. Down it went just like that. The low of the day on GameStop 152.72. We're about $1 away, roughly, from the low of the day, and that can easily be passed if this momentum keeps going the way it is. We'll watch it, see how it goes. Mortgage rates continue to inch upward amid a sluggish housing market. Headline just breaking through. The Dow down 250 at the moment. 154 on GameStop. 710 on SoFi. 787 on Tesla. Okay, kids. That's the story, and we're sticking to it for sure. Very good job, everybody, on your options positions. Just sit tight. Assume the position, the money-making position that option writers make. This is the money-making position that casino operators have as well. They watch the monitors and they watch the gamblers on the floor of their casino lose millions and millions of dollars. And they just go, yep, that's how it works. A couple of winners here and there, and then losers. And that's how we pay our bills, and that's how we make our money in Las Vegas. We own the casino, and we own the slot machines, and so do option writers. They own the market. Take control of your future and learn how to write options. Check out my classes. Check out my website, stockmarketswithbruce.ca. Head over there and check out the classes for yourself. Learn how to write options and make some money. Quit that day job of yours and take control of your life. Absolutely. We got the Dow down 233, SoFi at 710, GameStop 154.06 at the moment. Tesla 787 is desperately trying to hang on. I'm thinking $20, $30 down dip can happen at any time, and Nick will just be grinning from ear to ear among anyone else. If you're shorting Tesla, this might be the neighborhood to do it at. We'll see what's going on. Such fun times. Austin is saying a 52-week range for SoFi, 482 to 2465. That seems normal for any other stock, don't you think? 711 right now for SoFi. Bama Babe, ECB raises rates for the first time in 11 years. Alberto, Austin, I am laughing, man. You got me going. Totally normal, says John Big. That's totally normal. That's typical behavior. Of course it is. Thank you all for these thumbs ups now. 198 thumbs ups have come in. I'm going to hit the knee emojis to see if I can encourage some more thumbs ups to come in here. Hopefully we could break 200, 210, 220. Thank you for throwing me thumbs ups, and hope these knee emojis do what they're supposed to do. Make stocks go up that you want going up, and make stocks go down that you want going down. Thank you all so much for your support. 198 thumbs ups, and the knee emojis are coming your way. Knee. You can't stop this market. You can't stop the good times. So good, so good. 199. I'm a one away from 200 thumbs ups. And there it is, the number 200 thumbs ups. The knee emojis help power it over. Thank you, everybody, for these thumbs ups all day long, every day. You guys are the best. I appreciate it. Helping us get through the thumbs ups numbers, get the YouTube people to send us more viewers, which they do. They send more people here every day, and they discover us bit by bit by bit. This channel is growing with more option writers. It's the way to make money in the bear market. Do not fear upside. Absolutely make money. Thank you to Bill, Hybrid Duncan, Larry Titus, Sell My House, Nazareth, Not Your SoFi for hitting the knee emojis as well. So appreciated. Thank you, everybody. We're down at the moment 178 on the Dow. We got Tesla at 788, SoFi at 710, GameStop 154.28 right now. That is how this market is rolling. And we're going to see how it does all day long. We'll be back on the air at 3 o'clock Eastern time today for the final hour of trading. I look forward to seeing you there. If you could please pop in and say hi to us and let me know how you're doing on your contracts and see if these shares keep doing what they're doing. GameStop dropping again, 153.64. We're less than $1 away from the low of the day again. We're going to hit a new low if this thing keeps doing this. It seems to be wavering lower, a little high, a lower low, a lower high, a lower low, a lower high. It's backing up at 153.92, $1.20 away from the low of the day on GameStop. That's what's going on. SoFi 708 up 12, Tesla 788.87 up 46. Desperately holding that number. Don't know if it can. Tesla might give up some ground here. 213 on the Dow. We're dipping again. The Dow, another down dip coming through. U.S. leading economic index is pointing to recession around the end of the year, the conference board says. Those are headlines breaking right there. Not a surprise to a lot of us, is it? We're down to 153.64 again on GameStop. We're less than $1 away from the low of the day on your GameStop. And Nick is saying I got a 784 average on that Tesla, and it's at 787.90. I'm just about there. Nick, what limit order should I put in a buy order to cover, Bruce? What do you think? You know, my man, let's just see what the momentum looks like. If it gets momentum trading on the downside, it could be $20. You know, like 766 or something like that. 765.61. You know, and that's you might get yourself a nice little, almost a $20 pop here, or more. This is not, I mean, even a $20 drop would still be up 25 on the day. So it might drop maybe $30 from here to sit 758, 759. Let's see how it goes. 786 right now. We'll watch it. 153.10, 152.83. We're a dime away from the low of the day on GameStop. 152.83. It just plummeted through 153 like nothing. New low coming in here, I think. 152.80 now. 8 cents away from the low of the day. We're going down. We're down 250 on the down. It's backing off quick because of the leading economic indicator numbers not looking so good. These markets are getting hit with some selling here. Down 17 on S&P, down 24 on NASDAQ. Oil down 369, 152.98, 152.72 is still the low. We're just about getting hit. Going to hit a new one. Let's look another low. We're down 577 on your GameStop. John Anderson, thanks everybody. Splair, have an enjoyable day. You all, Austin, Congress is kicking around an idea to refinance public and private student loans at 0%. That might hurt a little. We'll follow on that. I don't know if that can be done. I don't know. 153.19 on GameStop with a 152.90 recent low, 152.80 recent low. See if we get another wave of selling here. SoFi 704 up 7. Tesla at 785, backing up just a little bit right now. The Dow down 250, S&P down 20, NASDAQ down 32. Going down. 153.19 on GameStop, awfully close to the new low of the day. This should be fun. I think everyone should take profit on Apple, says Michael. John, I just realized I haven't even logged into my account. Oops. hadn't given me a thumbs up. You haven't done anything. Oh my gosh. New low on GameStop, 152.51. Just hit a new low, down another 21 cents on the low of the day. We're plummeting under 152.50 now. 623 drop on your GameStop. All those contracts you guys have are falling now. All the rollovers are working. The contracts you've written are backing off. They're losing book value dramatically. 152.28, another low. Another low. 152, another low. 151.80, another low. Bam, bam, bam. The stock is coming in on GameStop. 151.80, the low of the day now. 151.76, dropping again. 151.36, down it goes. It's coming off quick on GameStop. Nice going. Everybody, your contracts are looking good. Easy on the source. Bickman, it's still morning. John, or easy on the sauce, I guess. Uncle Bruce, you got my thumbs up. Come on, man. Quit the crazy talk. Karim, Biden test positive for COVID. That's not good. Testy donkey. Wow. GameStop. We are down 259 on the Dow. We're off 22 on FTSE. We're down in Europe. Let's get over to US here. 151.58 on GameStop. Dow down 276. SP down 22. Nasdaq down 44. Oil 377 lower. That's what's going on. Watching. White House says Biden tests positive for COVID. That's not good. That is not good. That is not a good thing. 292 is the drop on the Dow now. 292. COVID is down 303 on the Dow. We're taking a dump here. This is not good when the President of the United States has COVID. That's never a good sign. Let's see what's going on. 151.14, new low on GameStop. It's dropping. 698 on SoFi, only up a penny. Tesla, 783, dropping. The Dow off 300 now. Interest rates, the U.S. rates. Let's see if we got anything going here. Can't get my big-ass iPad to behave itself. Okay, official. Biden has COVID. It's official. The Dow down 310. S&P down 28. NASDAQ down 68. We've got... GameStop at 150.50, new lows on GameStop, 150.50 now. We're off 12 on Rocket Lab. We're down a penny on SoFi. Looks like GameStop could drop through 150 like butter, hot knife through soft butter. Taking a peek at interest rates, U.S. Treasury 2.94 inch. That plummeting. The 10-year Treasury is plummeting. In yield, money is coming into the 10-year. The euro is a negative 101.74. The pound is down over half a penny. Back to U.S. markets. Oil down 344. The Dow down 328. He has very mild symptoms, says the White House. Very mild symptoms. You know he's fully vaccinated, so we'll watch all this. 149.59 on GameStop. We have a new low on GameStop. We've broken 150. We're now down $9. We have dropped now 9. Your calls are falling and are going to keep doing so. We could go much lower yet. The Dow now down 327 at this point in time. S&P down 29, NASDAQ down 75. Tesla 781. Nick, you're in the money and it's going lower. SoFi 698, only up a penny. 149.76 or so on GameStop. More pressure on the markets right now. That's what's happening, guys. Things are going on. Let's go. We had Trump had COVID too. Yep, headlines. He's positive. Nick, Tesla profit so far, 2.6K for not locking it right now. We'll wait for $20 down. Yeah, Nick, you're going to make money here. This thing's going to back off. It's 781. It's coming down. Jennifer, crazy how the market panics over positive COVID. Guess the fist pump with the Saudi guy didn't work out too well. Testy, it always starts with mild symptoms. It always starts that way. 311 is the dip. Remember all the handshaking he was doing in Israel? All the hugging and stuff? Don't know. You never know. From where, how, what, and from any of his advisors, any of those folks have been exposed. They're always around him. It is a vicious virus. It is so contagious. It's amazing. Let's see. 308 is the down dip on the Dow. Tesla 782. SoFi 696 down a penny. GameStop 150.18. Trying to hold the 150 level. I don't think it's going to last. I think we're going lower. We were at 160 this morning, 162 yesterday, I think it was. We're backing up here on this market. Interesting developments. We'll be watching this here all day long. We're negative on Matterport. We're down 225 on Alphabet. Matterport down 3.5. SmartRent down 4. Tesla 783. SoFi 697 unchanged. GameStop 150.96. Spire down 6. Apple down 60 cents. AMC down 27 cents. ATIP down down a nickel. Rocket Lab down 12. Sixtera down 40. ME down a half a penny. Twitter down 11. Home Depot down 220. Carvana down 29. Robinhood down 11. Vanik down 150. IBM down $3. Microsoft down 430. Goldman up 6 cents. U.S. Steel down 2. Meta down 2.99. Amazon down $1. Bed Bath & Beyond down 31. BlackBerry down 6. We got Norwegian off, Carnival off, Royal Caribbean off, of course. Target down $1. JP Morgan down $1. Costco down $1. Nvidia down $1. We're red everywhere. 308 on the Dow now. Tesla 782. SoFi 696. GameStop 150.64. 150.64 on GameStop now. Red selling is coming in. Biden taking Paxlovid and will isolate at White House, press secretary says. Down 312 on the Dow. 27-point drop on S&P, 73 on NASDAQ. Oil down 371. GameStop pushing 150 again. 150.30 backing off. SoFi down 3 to 694. Tesla's at 780.65. It's about to go further down. Still up $38 at the moment. There you have it. That's your latest. We're down 321 on the Dow. You've got lots to watch, kids. Lots to watch. Do not be surprised if the markets keep slumping. 336 on the Dow, 29 on S&P, 76 on NASDAQ. And we will see what's going on here. The headline is just one after the other. Biden positive. Biden is positive. Biden is positive. This is big. This is big. It's not good. It's not a good thing. Anyone in their 70s, 80s having this, not a good thing. It's not a good thing. Alrighty, everybody, let's watch this market. 781 on Tesla, 694 on SoFi, down 3. GameStop 150.23 now. The low of the day 149.49. 150.03 now on GameStop. We're about to break through 150 the way this is going. Interesting. Watching a lot of stuff right now. Oh my gosh. Down 317 on the Dow. Tesla 779. Nick, you're going to make money. 779 on Tesla. 693 down 4 on SoFi. GameStop 150.21 at the moment. And there you go, Splair. My first time this year was mild for maybe a handful of hours until it knocked me out for 2 or 3 days. Not vaccinated, Splair. And second time was really mild. Bama Babe, no, this virus makes older people really sick and creates months of fatigue. Lame duck. So, Nick, you own Tesla to be able to long or short it. He is short Tesla. He is short Tesla, and he's making money. 779 last trade on that stock. 150.68 on GameStop, down $8. Is today a day to buy? Nope, I don't think so. I think we're going to see lower prices before we see a day to buy. We're going lower down there. 778 now. 778 on Tesla. Another dollar just dropped off. And GameStop 150.61, 692 on SoFi. Dow is down 322 at the moment. All right, there you have it, kids. That's the deal. I'm going to take my break now. You guys keep an eye on this market. I will see you at 3 this afternoon for the final hour of trading. And watch those calls of yours drop in value as this GameStop is giving up money. It's given up $12 from yesterday to 150 now, and it's going through here. I don't think it can hold 150. 150.23 now. 150.40. We are about $1 away from the low of the day. We might go lower here. We'll see what happens. Wayfair stock price cut to 52 from 64. Interesting. 325 drop on the Dow, 778 on Tesla, 692 on SoFi, 150.32 on GameStop, everybody. Okay, everybody, have a good afternoon, and we'll see you at 3 today. We'll catch you there, and we'll grab the last hour together as this market comes in for a little bit of selling. 150.09. Here we go again on GameStop. 150.09. Looks like it's going to go through 150 again. Down 333 on the Dow. We're backing off on the big boards across the board right now. 778 on Tesla. Way to go, Nick. Making money. 150 even. 150 even on GameStop. Down 875. And there it is. 149.89. Just broke it again. We're within 40 cents of the low of the day on GameStop. 149.89 now. 149.49 was the low of the day. That's what we got. 149.83 now. Another drop on the GameStop. Tesla 780. Not doing great. Market down 315 after Biden tests positive for COVID. All right. Down 440 on oil. Going down too. Okay, we'll see you a little later, John Splair. Carvana dips too. Bama Bay, about time we had a down day. There you go. HPQ, where are we at? Where's the HPQ? 32.60, down 6.34 cents. Watch for that too. Okay, let's see what happens. 142, 149.32, new low, brand new low of the day on GameStop. Just hit a new low. 149.32 has been hit. 149.32. We're 149.38 right now. Stock coming in on GameStop. It's going lower on this session. All right. We'll see you later, everybody. Bye for now.